Hello, everybody. Man, this is starting to look and feel like a hangover that won't go away. It's like all of the traders and bulls and bears were up all night during the overnight session, drinking Jaeger bombs and chasing those with Red Bull to keep it going. This is just getting more than a bit fugly. On the spider here, we lost, of course, in December, the 50 moving average and the 200 moving average. The 200 had kind of flatlined a bit as far as its slope, but as you can see here, it's starting to lose a little bit of altitude. You've got money stream in a complete nosedive, and you've got the Russell heading us lower and lower again. It had made us what looked like a dramatic V bottom the day after Christmas, and it looked like it was going to have some punch in it, but this too has failed. So if we lose this low from Christmas Eve, there's nothing there to catch it. It's beyond a falling knife. It's a falling anvil. And as much as I shudder to think, should we lose that Christmas Eve low, which was followed by the low on the 26th early in the morning, there's no more support until we get to the low from the week of November the 4th, 2016. This would be on a daily basis. This is the low on the SPY. This is the low on the SPY that occurred during the VIX termination event of February of this year. And we have lost that. I'm on the weekly here, I'm sorry. We have lost that completely. That is now resistance. It's no longer support. It's failed support. So again, talking about last week's low on the spider, would have been the morning of the 26th. If that doesn't hold, here's our channel. 253.83 on the SPY, down to 208.38 on the SPY, which, of course, is very near SPY's 2010. I'm kind of surprised, really, that VIX is only at 25.45, when for the last few weeks it's been well north of 30. And given the Faapl event that we're going to talk about in a minute, I would have expected it to be much higher. And I'm going to throw this one in here just for laughs, I guess. If you were planning to buy the fucking dip and load up on 20 E-minis, you got your bounce right there exactly on the 330 candle. This is a 15-minute intraday. But you were picking up pennies in front of a steamroller, guys. And as you can see, you lose. It never got higher than that 330 candle. And of course, we closed on the low on the spider. Now then, to the elephant in the room, Faapl. That's one hell of a downside gap on a daily basis, guys. There's no support on a weekly basis anymore. Not there. Not the lows from 18, not the lows from 17. This is just in a straight engulfing bear bozu candle that's ready to just completely implode. You really have to go out to a monthly now on Apple to find anything. And I've spoken about the importance in other videos of the 21 period moving average, which Apple crossed back in late 2000, maybe mid 2016, when it crossed above 115 to 120, and it's stayed there ever since, of course, all the way up to here, where the geniuses over there were doing the biggest buybacks in history. Price is much higher than we are right now. But we've completely blown that support entirely. What's left? Well, you're going to have the 91 area, which hit it in February of 2016. And if you can't hold that, you're all the way down to $56 area, $56.11, which would take you back to 2013. I really don't know what to add to this, guys, too much, other than two things. I don't believe that China is the only problem for Apple. I don't buy it. And I think that developed markets are going to be throwing them some curveballs, just like China has. And we're going to hear the same thing about India at some point. But Apple is a stock whose day has come. Yeah, we're going to hear a lot about how Apple's to blame for the S&P, Apple's to blame for the world's economy. But I think there's a lot of stuff behind the scenes there that we don't know about, not the least of which is that Tim Cook is no innovative genius or creative genius. He's no Steve Jobs. He was a lot better at engineering buybacks than he is at coming up with interesting and world-changing products. So I don't think they've got anything to throw at the market that's going to send them back to where they were low these 6 months ago. So we're in for some interesting times, I'm afraid, that will probably be led by Apple. But if Apple's in trouble, you can bet your bottom dollar there's a few more companies with the same exact problems as Apple. I am King Cambo. Smoke 'em if you got 'em. That's how I roll for Apple and the Spider. And remember, the rose-colored iPhone is not gay.